What up, Forever Play Squad? I am back, and in this video, I'll be talking about different trading styles, and I'll be going over a quick example how you can use each trading style to become profitable in your trading. So, you already know how it goes. Run my intro. Hey friends and new traders, welcome back to the channel. If you're new here, my name is Matt and I teach day traders just like you how to become profitable by teaching different tips and strategies. With that being said, let's get into this one. Alright, so pretty much different trading styles is, for each trading style there's a different time frame you want to be using. Obviously, you're always going to want to enter on the lower time frame for your executions, but as far as the actual looking for the actual trade, you're gonna want to look at it on a different time frame. So let me just show you guys a few examples. So trading style number one, we have swing trading. So swing trading pretty much is you're looking for big moves in the market. It could take a couple weeks for these moves to play out, but once these moves play out, it's a bigger payout. And another thing is the benefit of swing trading is not only do you get bigger payouts, as in like pips, the moves of pips, but you also is more relaxed. It's a more relaxed way of trading. You're not constantly looking for trades each and every day. You might be looking for trades every other week or so. So with swing trading, it always comes down to having the patience. Always comes down to having patience. All right, so this would be a perfect example of swing trading. So you start with a declining trend line. All right, so obviously price is moving down. Pretty much you just want to look for big moves using your Fibonacci. So there's the decline, there's a pullback at a 32. You can enter short at a 32. So you also have to throw in confluences. So for me, I would have a moving average. I don't have it on the chart right now for some reason. I don't know why it's not on my chart, but I usually have the moving average there. And then there's a trend line, and then you have the 38.2. So those are three confluences, and then you could hold it and look to get out either at the 27 extension level or the 61.8 extension level. So that is pretty much swing trading. You're holding it for a few weeks until a month, pretty much. So let's see how long this trade actually took. So we'll be entering somewhere around here. And remember, you always want to execute your trades on a lower time frame to have the least amount of drawdown and to pretty much have better execution. So you'll be getting more bang for your buck, pretty much. Less risk, more reward. So we're entering somewhere around here after 32, and so right here alone, that is 392 pips. And this one is 597 pips. So what you can do, obviously, you could take partials right here or close out full. However you want to trade it, it's up to you. It's up to your trading style. You gotta know. You gotta know your own personality. Are you gonna be able to hold this and withstand possible pullback? Can you withstand the pullback knowing that you just made 597 pips and then it pulls all the way back, well, halfway back or a quarter back? We could say that's about a quarter of a move back and then declines again. So imagine if you held it and then you did something like this. So you're pretty much swinging it. So you got 38.2 once again. You enter. So you go from 597 pips to 1100, and you could say about 40 pips. That's a lot of pips. So, but here's the thing. Like I said, swing trading is a long game, but the reward is much more rewarding. The reward is much more worth it than doing simple in and out the market. And there's less pressure to look for those type of setups each and every day. So that is 161 days. So can you hold the trade for actually that long? Can you really hold a trade for that long? You just got to know your personality. That's what it comes down to: psychology and risk to reward. So, all right, so that is one way of trading, which is swing trading. So another way of trading would be day trading. So day trading is pretty much you're in the market for maybe a couple of days, or yeah, you're in the market for maybe 2 to 3 days. So you can see you got this set up right here. High to the low. And these are just quick examples of day trades. So this day trade, you have multiple places where you can get in. And like I said, you want to always execute on lower time frames. So let's say we got in about after this candlestick closed or within that day. And then you're in the market for about 15 to 14 days, and depending on how long you want to hold it for. Sorry, I'm looking at the wrong thing. So you're in the market for pretty much 2 days, 2 to 3 days, like I said. So you're in the market for about 2 to 3 days. It's the bars. You're counting the bars, not the days over here. It's the bars. Each daily bar is 1 day. So we're counting the bars. So 1, 2, 1, 2, 3. Sorry. So 1, 2, 3. On the third day, you'll be in profit. Well, we'd be taking profit. So, and lastly, we have scalps. So scalps is pretty much on the lower time frame, and you're just constantly looking for a quick in and out moves. So something like this, 15 minutes time frame. That'll be 57 pips right there. A quick scalp. Got it right here as well. Quick moves. We didn't actually get the close at the negative 27, but you could have taken profit at the 0% or the high where you made the markup on the Fibonacci. So, and the next thing, you might want to trade what directional bias doing scalps as well. So let me give you more examples of quick scalps in the market. So we got this move right here, high to low. So it's quick moves in and out. Like 38 retracement, 38.2 retracement. That's 34 pips right there. So pretty much for scalps, you're looking for anywhere between 20 and 50 pips, quick moves in and out the market for the day, and then you're done. And you could do that at least 2 to 3 times in each session. Each session you could look for a scalp. So you could look for at least 2 to 3 scalps a day, if that's what your personality calls for. So you got to know your personality. All comes down to trading psychology and knowing how patient you are in the market, and if you're willing to hold trades for long periods of time. And if knowing that you can't, then you just want to look for quick day trades. And if you like to see that profit come in quickly over a couple of hours or a couple of minutes, then day trading is something for you. And if you like to be more laid back and wait for the perfect setup, and you're able to hold trades for a long period of time, then swing trading will be the way to go. And if you're just looking for that medium way where you're not really looking for a swing, trading, you don't want to wait too long, and you don't want to be looking for scalps each session. You just want to look for one quick setup for the week, which lasts for 2 to 3 days, then day trading is for you. So I hope that clarifies different trading styles for you guys. It might be confusing at first, but once you figure out your personality and how you want to trade the market, and knowing your risk to rewards and things like that, things of that nature, then you just want to stick to that style. Or maybe you can even eventually, once you get really, really good, you could incorporate different styles. So say you're swing trading, you could still look for day trades while your swing trades are going, if that makes sense. So I hope this video was informative. Please like, share, and subscribe to the channel. Hope you guys have a wonderful day. I am out. Peace. Forever Pay Squad.